JBS, the world's largest meatpacker based in Brazil, has announced its plans to revive its long-standing aim of going public in the United States. The company, through its Netherlands-based parent company, JBS NV, intends to list its shares on both the New York Stock Exchange and the São Paulo Stock Exchange. This will be done using Brazilian Depository Receipts by the end of 2023, although the exact timeline may vary. The BDRs will be supported by Class A shares listed on the NYSE. JBS executives have long expressed their intent to list the company, or parts thereof, in the US, but have not done so to date. The company first went public in 2007 on the São Paulo Stock Exchange in Brazil. In 2022, the bulk of the company's $77 billion annual revenue was derived from its North American beef operation, U.S. pork unit, and its majority ownership of Pilgrim's Pride, the second-largest American chicken company. Employing over 260,000 people across about 190 countries, JBS owns several brands including Seara, Swift, Pilgrim's Pride, Moi Park, Primo, and Just Bear. Having started as a family-run slaughterhouse in rural Brazil, JBS has expanded over the last 2 decades to become one of the biggest meat companies in the U.S. It has invested billions in the U.S. market, including acquisitions of Swift and the majority of Pilgrim's Pride. The company is one of 4 meatpacking firms responsible for processing roughly 85% of U.S. beef. Guilherme Cavalcanti, JBS's global CFO, said, "The dual listing strategy will accelerate our capacity for diversification and growth into more branded and value-added food products, reduce our cost of capital, and generate greater returns for shareholders." JBS announced it would provide a $454 million dividend to investors in support of its plan. The company's shareholders will vote on the proposal at a general meeting, which is yet to be scheduled. The U.S. listing announcement comes at a time when American meatpackers are finding it difficult to profit from the 3 major meat types: chicken, beef, and pork. In April, Wesley Batista Filho, son of former CEO Wesley Batista, was appointed as the new CEO of JBS's U.S. division. Starting his career at JBS in 2011, Batista Filho has held various positions, including president of JBS Canada, CEO of Brazilian food processing company Seara, and CEO of JBS Brazil. He assumed the role of global president of operations in November. JBS's previous attempts at a U.S. IPO were halted by market conditions in the wake of the COVID-19 pandemic, according to company executives. Additionally, the company has faced a corporate corruption scandal in Brazil. JNF Investimentos, the controlling shareholder of JBS run by the Batista family, admitted in 2017 to paying around $150 million in bribes to Brazilian politicians to secure cheap government funding, fueling one of Brazil's most aggressive global acquisition sprees. The scandal resulted in the imprisonment of the company's major controllers, billionaire brothers Josley and Wesley Batista, for several months. JNF settled the case with U.S. authorities for $128 million in 2020, emphasizing the importance of the agreement in enhancing its corporate governance efforts. The brothers were acquitted of related insider trading charges by the Brazilian market regulator CVM in May of the current year.